Okay. So this is actually a question that involves bank reconciliation, the one that we haven't covered yet. Okay, we are just focusing on the cash book. Okay, so update the bank column of Jenny's cash book. Balance the account and bring down the balance. Okay, so read from the top to the bottom. Jenny received bank statement which showed a credit balance of 1367. Okay, and then on the same date, her bank column in her cash book showed an overdrawn balance of 1933. So we only take that information, okay, because the first statement, that one is referring to the bank statement. So bank statement, no, we are not interested at the moment. Okay. And then when comparing her bank statement and cash book, she found that the following items appeared on her bank statement but not in the cash book. So with that, we are going to update our. Okay, first, M Stores, a credit customer had paid by bank transfer. So always put yourself in the company, okay, Jenny. So you receive money, okay, from your credit customer, which is M Store. This is AR, account receivable. So what do? You put March 1st. Okay, March 1st. Detail, this is M Store, your account receivable. Amount 19. Okay, done. Next, interest received. Okay, also not in your cash book. So now it's for you to put it in your cash book. Debit or credit? Left or right? You receive interest. Correct. Debit left lah. Okay. So we put interest received. Mm. That one, left or right? Okay. Correct. Why do you skip to bank charges and not the next transaction there? Bank charges 125. What about this one? Oh, you already mentioned. Okay, 27, that one, dishonored check. Dishonored check. Same. Oh, okay. Okay, done. Last one. Direct debit for electricity had been taken. Where do you put that? Are you paying for electricity or are you receiving money for electricity bill? Huh? You use electricity and you get you're no, you're not getting money, right? You are paying direct. So this is a terminology saying that it's actually a standing instruction to your bank to make payment directly for the bill. Okay, the electricity bill. Standing instruction. So you won't know about the amount until you receive the bank statement. Okay, so this is payment out. So we'll put here electricity on the credit side. Electricity. Okay, amount 290. Okay, you're lucky lah. You're the only customer, TMB customer that received money for the bill that you're paying. Okay, so done all that. Let's look towards the bottom here. Is there anything else that we left out? Read through. Okay, this one is the information in the cash book but not in the bank statement. So this one we will learn next in bank reconciliation statement. Okay, so not now, later. Okay, that's another internal control process. But look at this. Upon investigation, she discovered the following error. A check made payable to the spot check means bank lah. Okay. this spot 45 had been recorded in the bank column of her cash book. By right, no problem, no issue, because that's correct. Because when you are making payment, you credit, right? You credit bank 45. Okay. And then the next thing is you debit this pay here. Okay. In this case, is T Sport. Okay. It's a gym membership. Okay, but the second sentence explains further. The check had been written from her personal account, not the business bank account. So that's error when you are taking it out as if it's normal business. Okay, so you have to correct the error. Okay, you have to add back the money because over here what you did was you credit bank. Okay, so what's the error? Okay, the error is actually this is considered as additional. This is a personal transaction, so you have to add back. Okay, it's not affecting the business account here. So you add back, so you put here correction of error. The amount 45. Okay, to clear off the error because it's not affecting the business money at all. Okay, so with that done, okay, all the relevant transaction for the bank column in the cash book, and we need to now balance the account. So to balance the account total, both sides, okay, to see which one is higher, it looks like the right side. You messed up anything. I think I messed up something here. Oh, this one. Okay, our opening balance. Uh-oh. Um, okay. 29th of February, we receive it. So the balance is 1933. Okay. So normal opening balance for bank account, debit or credit? Normal balance. The normal balance for bank account, debit or credit? This is your current asset. Current asset. Current asset always debit. Okay, so by right, your balance should be here, right? On the left side. Okay, but look at the word here, overdrawn. Overdrawn means it's on the right side. Okay, do you understand the meaning of overdraft? It's a facility given by the bank to current account holder to issue checks even though they do not have enough money in the bank account. Okay, so maybe they have only 3,000, but they want to issue a check to a payee amounted to 4,000. So can that be done? Yes, can be done. Okay, because it's a facility given to the clients by the bank, but they have to pay interest. And this is considered as liability, current liability for the business because they need to pay as soon as possible plus interest. Okay, so because of that, we put on the credit side. Balance brought down 1933. So with that, we can total up the whole thing here. Okay, so I think it's 3,469. Okay, we copy both sides, the total 3,469. And we need a balancing figure on the left side. We total up and we got this balance. Carry it down. Total 11 1166. Have we answered the question? Have we balance off the account? That is balancing the account. That is closing the account. Okay, so we have done first part. Okay, update the bank column account. Done. Balance off also done. The next one is bring down the balance. So it will go to um, down here. We select this side. Okay, balance down 1166. Then only we fulfill all the three requirements of the question.